So let me just have a look at the daily candle. Where's that line I heard? Sometimes I draw these lines. Okay, well it didn't do that. It went up above that line though. Oh, it's a really good daily candle yesterday, huh? I mean, it's a strong candle. Very strong candle. Today's candle is going to be important. It's a previous all-time high. Just mark it off here. This one. I think as long as we hold the previous all-time high, we're good. Even if we come underneath the local all-time high, the big flip is going to be the previous all-time high. I don't necessarily think that the price needs to necessarily hold that, but it will look bearish if we do come down there. It will look bearish, but then where does the price close? Yeah, it's a good, it was a good daily candle, but problem is it could be a trap. Long of the century. David is saying maybe we range for a few days and dip into the gap, everyone gets bearish and we go up. 2021 all-time high, long of the century. Exactly. All right, so let me just there's a couple of things I want to quickly do first. First, I want to have a look at XO charts because I saw some bearish divergence there. And, I just want to make sure it's there, still there. Yeah, you can still see it. So this is the price action going up into the all-time high. No bearish divergences. Everything looks quite bullish. Lack of participation. Higher high, lower CVD. That's lack of participants. So lack of volume, basically. You had a little bit of bearish CVD here. CVD going up, price going down, and now at the low here we had bullish CVD going down, price staying up, which caused this kind of bounce, and that led us to the current price action, which is looking to be bearish CVD. Almost higher. It is actually higher technically because it's above this little second peak, this end of this peak, slightly higher than this peak here, and the price is lower. So we have a little bit of local bearish CVD. Effectively what that means is that you've got limit orders that are sucking up the market buying that's coming in. Is there market buying? Yes, there is. I can see some leverage longs coming in here. Not crazy amounts, but there are some coming in. And let me just look at this whole range. How many long liquidations have we had in this whole range? Not much, just one big one here. Wasn't crazy either. Bit of shorts, that's a big short coming in there. Some big longs coming in here. Doesn't look like these longs have closed out. These ones that came up, unless they've scaled out. It doesn't look like this long has closed out. There was some shorts here in the lows. 6.7 million increase in OI. Some shorts here in the lows of this range. Longs, there's lots of longing and shorting in this range actually. On aggregate, would I say there's more longs or shorts? It's hard to tell. Can't really tell, but there are both. And effectively what you're looking for are for longs to close. That's what's gonna initiate the move. If we move downwards, yeah, you're gonna get longs closing. But right now I can see some bearish CVD. You see here how the price is at the daily open. The CVD is above this level here, so the CVD is higher. From here it's higher than this point, and here the price is lower. So you're getting market buying being absorbed by bigger players. The bigger players are limiting out. They're limiting out. They're trying not to market out. The reason why big players try not to market out are because of the fees on the exchanges. If you buy and sell a market, you're paying significantly higher fees than if you're using limit. And in some exchanges, the limit orders get paid just by limiting their positions. Not on Bybit, but on some of the exchanges they do. I don't think it's on Bybit. No, I don't think so, because I get charged on limits as well. Yeah. So that's XO. I'm not going to spend much time on it, BTC, because nothing's really changed since yesterday. This is my TA from yesterday, if anyone was watching. And this is what I drew. Didn't get as high as I imagined it could. But look, I drew this box, this nice imaginary box in the middle of nowhere in price discovery. I called it the sell zone, and surprise, surprise, Bitcoin loves to follow my projections. What's interesting about this sell zone that I created is that the price could not close into the sell zone. Look, 1 hour chart, no closes in the sell zone. See that? Couldn't even get to the top line that I had. I am in a short. I haven't taken profit. Maybe I should have. But actually my short is more of a cover. I'm covering my short, my Bitcoin spot rather than trading it right now. Just simply because I just want to see what happens. If the price does go up, I'll probably get stopped out. I'll lose a percentage, but then I'll probably re-enter as the price comes back down. That's fine. That happens. It's not the biggest problem because I'm at the highs. I'm only risking a very small amount for potentially significant gains. So the other strategy for taking profit is to go a little bit heavier. When you take profit, you're risking more, but you're aggressively taking profit and you're still well positioned in. There's different strategies for doing this. I personally, what I've done is I've had a little bit of a wider stop, about 73,300, just above that second line, and then I was just kind of nabbing a little bit, scaling in slightly. Just in this whole range, I've just been shorting actually, and I wasn't stopped out. Amazing. Because the thing about what I was saying yesterday was that it's extremely difficult to short. I did say that, right? If anyone remembers. I need to go back and replay my streams. And if you look at the current price action, you see how difficult it was to short. Yeah. Let me just get rid of these brush strokes so you can see what I'm talking about. You see how normally for a short I would do a swing failure, but look how many swing failures we had yesterday. That's why I was saying it's so difficult. Look, 1, 2, 3, 4, 5. We had 5 swing failures. All right. Good morning, Cactus. Good morning, Pacer number 1. Oh, you have a short. Well done. Well, look, just to make sure you have good risk management, because with Bitcoin you never know. So just be careful. Always be careful. But we are in a good place to short, and I'm in a short too. A lot of people are in shorts, which is also something to bear in mind, because shorts can get squeezed. So usually I would take profit, but it hasn't moved enough for me to take profit. So I'm probably risking it, but you know, that's what it is, risk versus reward. David is asking me to do a range pull. Oh, okay. Well, the point of control is at the lows. That's actually quite bullish with respect to the way the price action is. There is a high volume node of this range somewhere here. I'm not going to mark it off. It's just somewhere there. Potentially, if the price kind of goes up, the point of control could flip to the highs. Okay, and get my analysis back. Well, it didn't just go through that this arbitrary trend line that I'd drawn, and that's kind of why you draw these lines, just to see where the price can react. And so obviously, as you can see, the price has reacted. It hasn't just gone through it. The price is reacting off this bottom trend line, and whether it's the trend line or whether it's actually the volume range, I think it's more likely than not the volume range, but it does so happen to correspond with this trend line that I've drawn. So it's quite spooky. You know, you can be very superstitious about these things and imagine that this trend line is holding the price. The reality, it's not. It's this volume range that's actually holding the price. As long as we're in this volume range, we're range bound. As soon as we lose the value area low, we're going down. Okay, that's really what I'm looking for right now in terms of moving down. I'm not really fussed about this trend line so much, but because people do look at these trend lines, maybe some people are, and therefore that will just add fuel to the fire if we head down. Effectively, what you're looking at here is a combination of longs and shorts building up in this higher range. And I'm just explaining to you the mechanics of how the market works, okay? And it's really good to understand the mechanics of how the market works, because then you'll understand how the price moves. Effectively, how does the price move? Well, usually the price will move because traders will either market buy or market sell, okay? If you market buy, you push the price up. If you market sell, you push the price down, okay? And traders will market buy or market sell under two circumstances. They'll either market buy if they want to open a long position because they think the price is going up, or they'll market buy because short traders got invalidated and their invalidation is going to be up there, okay? So you have two types of traders market buying in this range. The traders who are just market buying this whole range and they're just trying to push the price up, okay? And then you have the other kind of traders who aren't market buying, but they have market buy orders placed above this highs here, above the highs here, okay? And that's just in case their shorts get invalidated. If the price comes up here, they're going to suddenly market buy all of their shorts, so they're out of their positions, and because if the price does go up, they don't want to suddenly be caught when the price is shooting up. Yeah, So that's how the price moves. And then for longs, it's the reverse. You've got shorts in this upper range. They're just shorting, they're just pushing the price down as much as possible. And then you've got longs. People who are long will have market shorts lower down. Now where lower down, we don't know. No one can predict that, but possibly you're going to have people put their invalidation slightly lower down here, and some people will have much wider invalidations maybe down here, and then you're going to have people who are going to have much wider invalidations because they're using some kind of low leverage cross leverage platform, and it could be down here or it could be much lower. Okay, and so you're going to get market orders on either side of the range, and then you're also going to get people within the range who are trying to enter big positions. They will market buy and they'll market sell. That's what's happening right now. That's how the price is moving. Most people, when the price is ranging, aren't usually limiting in, they're usually marketing in, and that pushes the price in the direction that they buy or sell market. Now, what does that mean? Well, what I'm trying to say is, at the moment, as long as the price is in the range, it's in the range. And the range, effectively, there's a volume range, which is this value area here. And then you have the kind of overall price range where you can extend it to the edge of the price, which was probably from there to there. Okay, so it's quite a tight range. If the price goes up, it will invalidate a lot of these shorts. They'll just start market buying to close their positions, and then the price can move up because now suddenly you're getting market buys at the highs. And then what you can get in that situation is either you can get the price range higher, or you can get the price fall back down. And the reason why the price will fall back down is because as the price goes up and you get all of these shorts invalidated and they start market buying, you'll also get longs market closing. They'll close at market and they'll pull the price down. The reason they'll close at market because of the massive amount of liquidity of market buying. So it's easy for big longs to fill their positions when shorts get liquidated, and then if there is enough market closing, the price will come back down. That's when you get the swing failure patterns happen, where you get the price go up and down above these previous highs, because as the price is being bought up by shorts closing their positions, you're getting longs taking profit, big longs taking profit. So that's effectively what happens when the price goes up and down, and then the reverse happens at the lows. It's exactly the same thing. If the price moves down, you're going to get lots of market selling because all of these longs in this upper range get invalidated. And usually when the price goes down, it's initiated by someone who's long, just closing their position at market. You get lots of market selling here because you've got all of these longs in this upper range getting invalidated. And then if these shorts close at market, they can pull the price up. If they don't, then the price just keeps on going down. And so probably they won't because of the location of where we are in the price. So we had the Bitcoin all-time high. If you've taken a short at the Bitcoin all-time high, you're not in a rush to close your position. Yeah, and that's the reality of the way people think. Yeah, no one's going to be, anyone who's short here, they're not going to be in a rush to close the position. Okay, so the chances of the price doing this are less. Yeah, now if it happens, consider that a sign of strength. Does that make sense? Because the shorts are very unlikely to take significant profit as the price comes down because of the location of where they're at. We're at the Bitcoin all-time high, and most of these people who are opening shorts are covering their longs. That's what people do with short positions. They're covering their longs. They're in Bitcoin spot positions, and most of these people, if not probably all of them, are bullish, like ultra bullish. they've got large spot positions, and what they'll do is they'll open a short and they'll risk a certain percentage, probably about 1%. Yeah. And so if the price goes up, they'll lose 1% of their Bitcoin position, but their USD value goes up in terms of Bitcoin, in terms of USD. Their USD value continues to go up. So they're willing to risk up to 1% or maybe more. But if the price goes down, it means that their fiat value is fixed. Sorry, no, their Bitcoin value, they don't lose Bitcoin value. In fact, wait, hold on, let me figure this out. They don't lose fiat value because the fiat value is going down. So effectively, what happens is they increase their Bitcoin value. Their fiat value doesn't drop. So what happens is their fiat value is fixed, but their Bitcoin value goes up. And yeah, that's kind of how it worked. Pacer number 1. You teach really good. Okay, thanks. It's my lost vocation. So that's how the price moves. People here who are shorting are mostly they're covering. I've covered. Yeah. I will take profit. I'm not stupid. As we come down into lower prices, I will take profit. I'm not really fussed about covering. I'm just happy to trade the range and trade the price movements. You know, I don't have a crazy Bitcoin account. Most of my trade plan is a higher time frame trade plan on TRVL, and I'm not really touching that because I'm trading that on a higher time frame. This is just for fun. Like all I'm doing with Bitcoin now and with you guys is just having fun, really. And the trading that I'm doing is really all fun. It's the best way because I'm not stressed, and I'm slowly building up my Bitcoin account day by day. It's not a big deal. I'm not really fussed. And we've got about a year to do this, so it's going to be fun. Hopefully it's going to be fun. So look at the price action now. What do you see? And it's just an open question. Let me, for the sake of argument, let me just also mark off this range. Actually, I won't mark it off because it's not necessary. Let me just close all of this. Get rid of that. Should have just put this in all in the group. So let me just do that. I'll just hide that there. All right. Where's my fixed range? Okay, so what do you see in this formation of candles? Yeah, it's easy, right? Everyone can see what I can see. Seeing a rounding top. See that? Rounding top. Okay, very easy to see. Just be aware of what is easy to see, because if I can see it, everyone can see it. Yeah, if you can see it, everyone can see it. And we had a rounding top here. Yeah, see that rounding top? Down and up. Okay, so you have to be very careful about these patterns, because even though they are bearish, which they are, it's a bearish pattern. This is what's forming now is a little bit of a bearish pattern, especially in the context of where we are. We're in this kind of all-time high. We're forming a rounding top. Very clear to see. This is always possible. This kind of price action is always possible. That's why you take profit, because of what could or could not happen. So I don't know if we're going to find strength to go up. And if we do go up, I don't know if the price isn't just going to reject again, because that's going to be a really good opportunity for someone who is bearish to short. Okay, and so what you have to bear in mind with this kind of price action is, for some reason, someone could push the price up, liquidate all these shorts, and then they themselves will short, and it'll do that. So that happens quite often. Okay, and then the trade to be had is a swing failure. You'll get stopped out of if you're in a short and you haven't taken profit. You will get invalidated, but then you can re-enter. Okay, and so that's why trading can be difficult for some people, because they don't know what could happen, and so they're not prepared for the possibilities of what could happen. Okay, and I'm just preparing us for the possibility of what could happen. So if it does happen, you're not panicking and going, what the hell, what's going on? Bitcoin is now going to 1 million, because actually what's happening is something else. So you should always be prepared for something like that. Very possible. Yeah, don't think that this isn't possible. Okay, it doesn't mean it's going to happen. I'm not saying it's going to happen, but it's very possible for that to happen. And all that's happening is that a larger player, a whale, is buying to squeeze all of these shorts, and then they themselves will take a much bigger short position at the highs of this local range, hundreds of millions, who knows, and they'll just sell the price down at market. So I am prepared for something like this. If that was to happen, I will take a short. I will short that. Okay, I'll get invalidated, but then I'll short again. and that'll be fine. That's normal. But I'm not saying it's going to happen. I'm just saying you just got to be prepared for something like that. If you are trading, that's what I'm prepared for. And obviously, if it doesn't happen, then you'll see. Because if the price suddenly did do that, for some reason that I didn't know, and then it just found support of that previous high here, then you wouldn't take the short, and actually you're now consolidating at a much higher range, potentially. Okay, now this is what I want to prepare us for. If for some reason this imaginary trend line that I've drawn holds as some kind of neckline, and the key is in the word neckline, yeah, then effectively what you could potentially form now is a much more prolonged range. Okay, and guess what we're forming? Yeah, you see, you have to be prepared for that, because that could also, we could also be right now on the left shoulder of some sort of longer head and shoulders pattern. All right, or something else. Like, I'm not saying this is going to happen. I'm just saying that if we do get some kind of squeeze from this neckline, and the price does kind of range a little bit above the previous high and doesn't swing failure down, then you could be forming something else like some kind of head and shoulders, or you know, the price will just go up and down, and you'll get a swing failure, and then the price will go down. You know, like, there are certain things that can happen from this position. That's what I'm saying. Even though it looks bearish, we're still range bound in this upper range, and it looks like this neckline is kind of holding. We are forming slightly higher lows. We haven't taken the liquidity from these lows. You can see these are all higher lows. And the other thing is, if the price does go down, I want it to go down actually, because I'm in a short. Want to take my profit and be done with it and move to the next trade. Let's just say, for the sake of argument, we go down, and let's just say it gets really violent and aggressive, and we just clear out all of this liquidity down into my little buy zone. The price could snap back up, and it could be snapped right back up, and you have a little V shape potentially. Why not? And you're now going, oh shit, you're now going for, you're now going for higher prices. You have to be aware of that too. Yeah, so people who are shorts, are in shorts and don't take profit, there's so many things that can happen that can destroy your position if you're not able or willing to take profit when the price moves in your direction. You have to be aware of that. because if you are in a short, you're just basically shorting back into support levels lower down, and I've marked them off. I've got this golden pocket hypothetically to this higher level here, but actually slightly lower. It doesn't really matter. And you know, that could happen too. And then the other thing could happen is if you don't get a snap back up to do that, this would invalidate this idea. And it's the same as this. It's the same idea here. You had the local range here. The price came back down. As soon as it closed back up into this range, you see how the price snapped up, right? And if you get that behavior and the price comes back into that higher range, the price can easily get snapped up to push it much higher. And then the other thing that could happen if we do potentially go down is if the price does go down, fill these single prints, find support, shorts will take profit, the price will snap back up, back above this previous high here. It could just range here. You know, you could just be still in this higher time frame kind of wedge with a little deviation. Yeah. Now the price could then just range here, and then we have to see what happens. Does it go up? Does it go down? It could do either. Yeah, like you have to realize that the price can do anything and be prepared for what could happen. But usually it will happen in and around these major lines that I've been drawing on the charts. Okay, these are the lines to bear in mind. Okay, so I'm just taking into consideration the key levels where the price can move in and around. That's all I'm doing. I'm just kind of analyzing the future and contemplating what could happen and then being prepared for it. I'm prepared for a long down here, and if the price does move down, if we find support on this previous high, and if I see that there's a reaction, I'll probably will take profit there. But more likely than not, the single prints from here to here will fill, and I'll be looking to take profit there, and then I'll also be looking for a reaction, and maybe I'll be looking for a long. I don't like to catch falling knives arbitrarily. I prefer to see some kind of liquidation event, and if there is a liquidation event, then you could be going much lower. You could be just going bam all the way down, take out the liquidity from here, and then you have a much better long opportunity with a swing failure. That this is a golden long opportunity all the way down here. That's a golden opportunity, just simply because of the point of control, that and the back test of this trend line that I've drawn further down here. It comes up. See from here. I think that would be a really good long opportunity, and it's an easy entry as well because you'll be looking at a swing failure. So actually I can just move that line now to there and just check the alert. Is it correct? Yeah, it's fine. All right, so this is kind of my trade ideas on the local time frame for today on Bitcoin. Is there any questions? How many people are watching? A few, huh? Welcome. Was that clear for everyone? I'm going to do a range pool. Just from the whole range. I don't know where from. I can't remember. Somewhere here probably. See if there's any changes in the value areas. No, point of control, same place. High volume node, same place. The high volume node should react, so it might not, if the price might not get down to this point of control. So just bear that in mind. You could, if you do get a if we do get a liquidation event, it is possible that the price reacts there. Who knows? Buy low, sell chlamydia. What kind of name was that? What the hell? Chlamydia. Dude. Suraj Majar, should I short Bitcoin? What the hell? What kind of question is that? What are you trying to do? Are you trying to trade? Are you trying to invest? I don't know. Are you trying to invest? What's your, do you have a, I don't know. I have a trade plan. This is it. This is my trade plan. I'm in a short, but I have a trade plan. I will take profit. I've only risked 1% of my trading account. I'm willing to lose 1%, right? In this trade. So I have a trade plan. I have an invalidation. I have my take profit target. Do you have a trade plan? What's your invalidation? What's your risk? What's your reward? What's your take profit? You have to ask yourself these questions. If you can answer all of those questions satisfactorily, maybe you can short. Does that make sense? I wouldn't just short Bitcoin. It's mad. Who shorts Bitcoin? But then who longs Bitcoin? You have to have a plan. Always have a plan. Execute your plan. Don't deviate from your plan. All right. And people are asking me about TRVL. Let's go to TRVL. Today, someone asked me about TRVL. Let's go straight to TRVL. You know what they asked me? They asked me, are you selling?